FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Is the rally in precious metals here to stay? Is it time to buy or is it time to sell? Is it all a question of cycles or are the fundamentals ruling? Well, to get the real answer, we're going to Rick Ackerman. I like his system, his hidden pivot method, Rick's Picks, the newsletter that goes out daily. You can get it for free, and he's got a great offer for you as well. No, he's not an affiliate of the Financial Survival Network, but he's here now. Rick, welcome back. It's been a while.
Thanks for inviting me on, Kerry.
Hey, so gold, almost right from the beginning of the year, it's been like a different market, hasn't it?
Yeah, it's been a great rally. You know, I'm looking at the weekly chart, and the method that I use assesses the power of the rally based on how many prior peaks it surpasses without correcting. In the case of COMEX April Gold, everything that's happened since New Year's Eve, essentially we had the futures trading around 1182 then. They've reached a recent high of 1355. So we've got 200 and plus dollar rally, and all of it has occurred without any significant correction along the way. My magic number, basis COMEX April, is 1361.10. So if we get above that without this market correcting, and we've been within a few bucks of that number so far, it's going to shorten the odds, increase the chances that we're really looking at the birth of a new bull market in gold.
And what about silver? Silver, it's been lagging a bit, hasn't it?
Yeah, but, silver has done pretty well. We had a more substantial pullback in January in silver than we did in gold. The equivalent number in silver to the one that I just gave you would be $23.12. So we've gotten within the high so far has been $22.18. So we've got a little work to do here, but I think that silver is more than capable of catching up. It's going to be very energetic when it catches fire.
Yeah, you think that gold's going to pull it along, or is silver going to take the lead at some point? People in the precious metals markets, boy, they've really, they're like the Rodney Dangerfield of investing,
Well, I think that they're going to, it won't be a case of gold pulling silver along. I think they will go in some sort of rhythm. Some days silver will probably be relatively stronger, and other days gold. But, so many of the gold mining stocks in particular, the junior explorers, are so hugely oversold right now that there's a lot of leverage in them. And in the meantime, we're getting really good, encouraging price action in the commodity gold. So it's typical of a bull market that it goes quite a ways before the skeptics even realize what's happened. And even the hardcore believers, they've been pounded so hard for so long that they're not quite believing it themselves yet. So that's good because it really keeps too many bulls from jumping on board, because every bull is somebody who's going to be taking profits along the way. But so far the rally has that kind of light and frisky look that suggests that not everybody suspects that this may be the real deal.
Yeah, you think people are very skeptical of this thing, huh?
Yeah, and that's really gold's best friend right now. If everybody were a believer and you were reading, in Time magazine that there's a great bull market underway in gold, then it would be acting more like lead. But as long as that skepticism is there, it keeps too many profit takers from piling on at this early stage.
Yeah, so skepticism is a gold bull's best friend at this point, huh?
Absolutely.
Yeah, and how do you play it? Do you buy the physical? Do you what's the best way to be in this market?
I think, speaking for myself, it's always good to keep some physical gold around in the form of coins and ingots. You know, in the past I've succumbed to the temptation to bail out of stocks, but I've got a maple leaf sitting right in front of me right now that reminds me that gold it's a beautiful metal. It's something everybody should possess. And hang on one second. So physical is kind of the inspiration that you should have as a gold investor to keep you on board. But as far as some of these juniors, they've had a good move off the bottom, and I think that there's going to be a good play in them in the years ahead, certainly if we're looking at the beginning of a bull market.
Yeah, and I guess gloom and doomers are skeptical about the stocks. You look at Andrew Hoffman, Miles Franklin, he says, don't touch paper, you're going to get burned. But, you know, having some exposure there, the profits, the potential is pretty enormous at this point, huh?
Well, you get good leverage. You know, one of the popular junior mining vehicles is an index called GDXJ, the Junior Gold Miner ETF, and it's had a fabulous move off the bottom. You know, we were at the end of December, we're down under 30, and we've been as high as 45. So it's had a 50% move just this year. And the last few weeks, it looks like it's been consolidating for another pretty good push. So, you know, there'll be lots of buying opportunities, but I think at some point you're going to have gold make some sort of breakaway move that will make it even more difficult for people who have sat on the fence to jump in. So I would say it'd be good to find a gold stock you like and to get a piece of it now.
Yeah. And you think they're going to have their move, that it's a case of every dog has its day?
Not a dog, really. You know, I've been on a lot of mining tours with Al Corlin, for one, and you go to these mine sites, and the CEO, according to Mark Twain lore, a guy with a gold mine it's a liar. A gold mine is a hole in the ground with a liar standing at its edge. But what I've found in reality is that the CEOs of these mining companies really know their business, and they can sort of, with the sweep of a hand, say, we own leases to all of these mountains that you see in Nevada. Every bit of silver or gold we can extract from them is ours. And it's frustrating because they know that the gold is there. Sometimes it's expensive to find, but they know the resources are there. And of course, it's a question of when this will dawn on the investing public. So far from being dogs, these gold mines have been hugely undervalued, and even with extraction costs up there in the $700, $800, $900 an ounce range, they're still profitable. So there's a lot of good value there, and you know, I think you have a lot of leverage in the, especially in the junior mining sector.
Yeah, I mean, those stocks just got so low, Rick. I mean, they were literally giving them away just about. I mean, they were selling at below liquidation value.
Right, and again, that is very frustrating to the corporate officers who know exactly what they've got in the ground.
Yeah, and even at this point, their assessments, their guesses of what's in the ground are not that crazy, right? They're pretty conservative.
Yeah, I mean, the way gold's gotten pounded, if you ran a mining company, you had to be very conservative and frugal as far as your methods of extraction. You know, all the gold mining companies have cut their costs enormously. You've got some operators in the Arctic Circle who have just found ways to get the cost of extraction down from somewhere like $1,000 an ounce to closer to $600. And of course, that's in a place where you can't even survive outdoors for more than a half hour unless you've got special protection.
Hey.
So
Yeah. Hey, did you ever happen to watch that show, Gold Rush, by any chance?
Yeah, I've seen that from time to time, and it's unbelievably difficult to get an ounce of gold out of the ground, isn't it?
Yeah, I mean it's crazy, and they got this 18-year-old kid. I don't know what their cost of extracting an ounce of gold is. They make it look in a lot of ways much easier than it really is. But this kid, Parker Schnabel, he's 18 years old. He's up in the Klondike, and he manages to get 1,000 ounces of gold for the season, 1,000 and change. And I don't know how, he's just digging dirt and he's using a wash plant. I mean, this is like, it's 1800s technology, basically, Rick, with throw in some electricity and diesel engines, right? Pretty much. I mean, he's got a sluice,
That's the appeal of prospecting. I remember speaking at a conference. This was probably 15 or 20 years ago, and one of the miners there was a kid about, I'm thinking he was maybe 19 or 20 years old, and his legend sort of grew out of having driven up to the Yukon in a Toyota pickup truck, and he was doing the same thing. He was extracting quantities of gold that allowed him to justify being up there in the freezing cold for the better part of the year. So you really can strike it rich, and there are. It's still possible to stake a claim that's on the edge of some of the bigger companies up there that are throwing everything they've got at digging holes.
Yeah, it's remarkable. I mean, the guy gets 1,000 ounces, and I'm just wondering how much. They don't tell what his profit was, how much it cost him, but it's just remarkable because they're saying here in one blog posting I'm looking at that it cost them 24 gallons of diesel for every ounce of gold they produced. This was in 2010, and that's a lot of diesel at $4, but still, that's only $100 an ounce. So who knows? Hard to know, but it's pretty interesting to think about. So, hey, what's your take on oil prices according to the charts here?
Oil prices are so geopolitically driven that they're not in a completely different world from gold, but they certainly respond to things that we've had oil come down really sharply. On the May contract, for instance, we're down from 105 to 100 just over the last couple of days, and that's only on a slight thaw in Ukraine. I would say that it's interesting that the world views the status quo as Russia just annexed Crimea. Can we get on with the party? But that's really what's happening. So, we've also have long-term supply prospects now, especially with Obama ostensibly negotiating with Putin on the basis of what the U.S. could do to energy prices. We've got an energy glut right now, and Congress is looking at the unusual step of allowing U.S. companies to export energy. So things are changing, and when the U.S. can have a positive impact on supply, the big picture is really changing. So in the meantime, crude has had quite a move up, and I don't think the price is going to soften too much below that. Let's say $80 might be the floor right now, but the only thing that'll bring oil down seriously would be a global recession.
Yeah, which we presumably have been in for the past 5 years, and yet the price is not coming down, is it?
Well, we've been in it in a way. The banks certainly in the U.S. have benefited, but so many other Americans are still in a wallow that goes back to the Great Recession. The Great Recession really never ended for many people, And even as we were going through it, grinding through it, China's economy was pretty robust. But because China is such a huge consumer of energy, they're going to be a major factor on oil prices. Right now, all we hear from China is that there's a pretty dramatic slowdown. But on the other hand, slowdown for China might mean 5% GDP growth.
If you can believe those numbers, though. You know how those numbers are very questionable at this point.
Yeah, nobody really believes them, but I think you get a kind of intuitive sense that things are pretty good in China. The economy's strong, but yeah, there are a lot of speculative excesses. We have a guy that posts regularly on my site. His name is Mario Cavolo, and he is an American expatriate with an office in Shanghai, and he works as kind of a liaison between American companies that want to do business in China and China. He's sort of a one-man chamber of commerce, and he's always saying that rumors of China's death or over speculation in China are greatly exaggerated. And his point is that savings go so deep there that China can afford to have some of these ghost cities, that even if they put billions and billions of dollars into monorails that go nowhere and cities where no one lives, they have the deep savings to absorb that kind of waste. And, of course, at some point, even the monorail to nowhere will be functional.
It's the Wild West, pretty much there. And, the problem is that in a centrally command and control economy, which to some extent it still is, even though they do have a large free market sector where it's sink or swim, but you still got a guy in Beijing with his hand on the joystick of the economy. There's going to be malinvestment, and then they're going to try to cover up the malinvestment. And just like in the U.S., what they're doing now, it's just going to lead to a greater bubble and a pop at some point, right? I mean, it has to wind up that way. There is no way to avoid it. And we're all...
You're right.
Right?
Well, there's no question there's been a lot of speculative excess in China. The Chinese government, though, is more aggressive in suppressing that kind of speculation when it gets a little too wild. You're always reading that the Chinese central bank has done this or that to quiet real estate a little bit. So they're more proactive, really, than the Western banks.
Well, we'll see how smart they are. It's worked so far. We'll see how smart they are. But they did print up, $17 trillion in the last 5 years to fight the deflation. We'll see. We'll see how that story works out. I'm a little skeptical myself, Rick, but so far so good. But I don't think anyone's smarter than the market, and I think they're basically like the U.S. was in 1929, and with similar results. But hey, the last chapter has yet to be written. So oil going to be interesting, and food prices are just going out the roof. And a lot of that's due to the drought in California and in Brazil, but a lot of it's due to monetary inflation as well. What ag commodities you've been following, and what do you see there?
I've been following Trader Joe's. They just built one in Boulder. Everybody who experienced Trader Joe's, perhaps having lived in California, was clamoring for that store to open here. It's put a little pressure on Whole Foods, but you go into Trader Joe's and you load up, and it's almost like buying a basket of Whole Food stuff for a third of the price. But you're right. My wife does most of the grocery shopping, but when I occasionally go, I'm absolutely it's breathtaking what's happened to grocery prices, and it's in the context of packages all shrinking. The prices have gone up, and the quantities in a package have decreased.
Toilet paper and paper towels especially, and now they're giving you like super rolls 2-for-1, like they're doing you a favor. You notice that one?
Uh-huh.
Latest scam.
I almost don't want to shop, and the joke is, the irony is that it's easier to go out there and buy a $40,000 automobile than it is to fill a couple of shopping carts, because with the automobile, it's not like real money. You borrow it at 0 or 1 or 2%, and there's so much credit available for stoking consumption in that way, getting the auto sales going. But when you shell out for groceries, that's real money.
Yeah. The things that you need, you're paying more for. The things that you want, you're paying less for. Interesting how that works, huh?
Well, that's the old supply and demand at work.
Yeah.
As soon as we stop demanding toilet paper, you can bet the prices will come down just like that.
Yeah, for some reason, Rick, I don't think that one's going to happen too quick, but if you figure out a way to make it cheaper, and it's really the grocery prices and the restaurant prices are just escalating out of control. And I'm not talking about Mickey D's, I'm talking about like regular restaurants. They're just going, really parabolic, these restaurant prices. And, this is in the United States, where we spend 10% of our disposable income on food. The rest of the world, where they're spending 30-40%, or you look in the Middle East where they spend 80%, and you get a 10-20% jolt in food prices, it doesn't take a rocket scientist to wonder why they're out there burning the place down in Venezuela, why they're killing people right and left, because it's food. Once you can't feed your family, you take to the streets.
Well, America's a far cry from that. We become restaurant diners. I was speaking for my own household. My wife loves to go out for dinner, and we probably go out more than we should. But the restaurants themselves are between a rock and a hard place, because the ones that have said, well, they just want to serve quality food, if they keep the quality up, it's getting really expensive. You go to places in Boulder here in Colorado that have a good bar burger. Well, a good bar burger is up to $12 right now, and that hasn't discounted the next round of higher beef prices that we've been reading about that are coming, because, of course, the drought has cut back on feed stock, and a lot of the cattlemen have really thinned out their stock. So, we've got more inflation to come, and who knows? One of my subscribers mentioned that the Woody Allen corned beef sandwich at the Carnegie Deli is now, they just raised the price from $20 to $25.
Wow.
So if you want to put quality beef out there, for sure, you've got a real problem, because at some point the buyers are going to resist, even the most well-heeled buyers.
Yep. At some point, you're looking for substitutes, and, at some point you don't go out, right? You stay home.
Heaven forbid. I'm trying to picture my wife cooking every night, and I'm not sure I can get her to it. But and of course, it's always tempting to go out anywhere you want. You can, on any given night, you can say, well, let's have Indian tonight, or it's been a while since we've had good Tibetan food, or Italian, or Thai. So just the choices alone make it so appealing. But there really is a squeeze now, because restaurants are just finding it impossible to hold the line.
Yeah, well, you got to pass the costs on. We're all paying for the debauchery of the currency, and we're all going to continue to pay and pay and pay and pay, because there really is no way out of this, let's face it.
Yeah, and my own end game is deflationary. I know you and I have talked a few times. We've known each other for long enough that I think I've established my creds, and I don't see the grocery bin inflation as being really very significant. It's significant to the extent that it affects consumers, especially at the lower income levels. But the big picture, I think, is one of a deflationary juggernaut that is just out there waiting to implode. And as much as grocery prices can annoy you and sometimes strain your budget, the bigger picture is a quadrillion-dollar derivatives edifice whose collapse implies pure deflation. So I'm still very much on the deflation side of the argument. And so far what we've seen in the real world, especially in Europe, says that deflation is really it's the true dragon here.
It will come eventually, but I think we're going to have a lot of inflation first. You can have both of them at the same time. On that note, Rick, your site, where people find you, where they connect with you?
RickAckerman.com, and I've got a nice, if you click in the upper left-hand corner, there's a free 2-week trial subscription. It'll get you in the chat room, and you can just see what's on the minds of some pretty good traders, and also you can access my daily trading recommendations.
All right, rickackerman.com, and of course, in the show notes on financialsurvivalnetwork.com, got a click-through link, take you directly to Rick's site, and don't forget to sign up for the newsletter on financialsurvivalnetwork.com. Rick, it's good catching up with you. We'll talk with you again real soon. Be well.
Great talking with you, Kerry.
Summer is almost over, and so far we've really lucked out. No hurricanes. And living in Florida here, I'm extremely grateful, but that could change tomorrow. And look, we're about to celebrate the 1-year anniversary of Superstorm Hurricane Sandy. Do you remember that one? Not very many people in the Mid-Atlantic or the New York area region were prepared for it. But if you had PrepareWise emergency preparedness food, you were ready. If you'd prepared with PrepareWise, water, and the basics, some currency, and a means of self-defense, you weren't caught off guard. And if you weren't prepared then, please learn from it and get prepared now with PrepareWise emergency preparedness food. It always pays to prepare. Go to preparewise.com, use the code Lutz. You'll get great savings. Depending on the size of your order, you're going to get a whole lot more. Be prepared. Don't be caught waiting for the government to come and save you. Preparewise.com. Use the code Lutz, L-U-T-Z. Be prepared.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.